The situation around the new 100% tariffs on Chinese imports is rapidly escalating. Although the leaders of the two countries, President Donald Trump and Chairman Xi Jinping, have already signaled through insiders that they plan to meet in 2 weeks to start talks aimed at easing the trade war, given the unpredictability of one of the parties, no one can be sure the meeting will actually take place or that it will change the course of events. Analysts from the respected publication, The Independent, note that the announcement of a 100% tariff is not just a threat, it is a tool of pressure. But at the same time, its implementation can be canceled at any moment. The White House has already instructed key agencies to prepare for the scenario of full tariff implementation, and even attempts at a tricky postponement are being considered a realistic option. But inside the American business elite, there is growing panic. Despite official statements that the measures could be delayed, many companies are starting to act proactively, assessing risks, shifting supply chains, and revising budgets. One of those companies is Tesla Incorporated. According to insiders, there is quiet alarm at Tesla factories as the production of some models is already preparing for a possible halt. Recently, sources close to Elon Musk's advisors said that after his conflict with Trump, Musk lost part of his influence over the administration, but through his advisors, he sent an informal warning that if tariffs are introduced on both sides, Tesla will be on the brink of collapse. The Chinese market is crucial for the company, and if it is lost or severely restricted, the consequences could be catastrophic. First, Tesla is heavily dependent on Chinese components. With rising tariffs or additional duties, buying those parts will become economically unfeasible. Second, the Chinese market is one of the largest for electric vehicles and key to Tesla's growth. Losing it would mean a sharp drop in revenue and mass layoffs. Engineers at Tesla's Chinese and American factories reportedly do not know what to prepare for, and if production stops, thousands of employees could lose their jobs. Musk understands all the risks, but at the moment can do almost nothing. He remains a hostage to the geopolitical situation. Within the company, there is discussion of a scenario in which, if US-China negotiations fail, Tesla will be forced to scale back the production of some models, limit new investments, and focus on the Chinese domestic market, or seek alternative supply sources in Southeast Asia. Meanwhile, Financial Times reports that China has already tightened export controls on rare earth elements that are crucial for high technologies, including the automotive industry and batteries. This creates additional leverage over American and international companies that now have to worry not only about tariffs, but also about potential supply chain disruptions. According to Reuters, the US and China have already started imposing reciprocal port fees. American ships are being charged by China, and Chinese ships by the US. This shows that the trade war is moving beyond simple import tariffs and spreading to logistics and infrastructure. Equally concerning is the fact that key industries in the US have begun publicly complaining about losing markets and declining revenues due to tariffs. For example, the annual survey by the American Chamber of Commerce in Shanghai showed that almost 2/3 of US companies operating in China expect lower revenues in 2025. This is a serious signal. If major corporations start feeling the threat, the problem is no longer a distant risk, but a present reality. Experts note that the current threat of a 100% tariff could push the effective tariffs on Chinese goods above 140%. The difference between threat and reality could be minimal, and that is exactly what investors and companies are responding to. As for the negotiations between the leaders, a meeting is tentatively scheduled in 2 weeks, which was supposed to ease tensions. However, according to White House internal sources, the decision can be canceled at any moment considering the president's personality and his tendency for abrupt turns. Diplomatic circles note that they are working on the meeting but are not beating the drum because no one is sure the conditions will remain the same. Some insiders in Beijing say the meeting is viewed more as a pause, an opportunity to buy time rather than a real step toward peace. In business circles, discussions are already underway about a Plan B in case the tariffs are actually imposed. Companies are considering options such as moving production out of China, reducing the Chinese share of supplies, ensuring risks, and stockpiling components. But such measures require time and money, and not everyone will be able to withstand it. Tesla has become a kind of indicator. If even such a large, flexible, and technologically advanced company is preparing for the worst, the alarm signal is clear. Despite its technological superiority and brand weight, Tesla may not withstand the blow if the Chinese market falls away or is severely restricted. In addition, analysts note that even if the leaders meet and try to de-escalate, it may not lead to the removal of all threats. The tariffs may be postponed but not canceled, and the tension may remain in a dormant state. That is why companies are operating on the assumption that a postponed war does not mean its absence. Chinese authorities, in turn, do not hide that they view Tesla as a strategic example of American business dependent on China. That is why, according to Hong Kong Economic Journal, the Ministry of Commerce of the People's Republic of China is already discussing a scenario of introducing selective restrictions, special conditions for companies that, from Beijing's point of view, are not sufficiently neutral in geopolitical matters. Tesla ranks among the first on this list. In the event of escalation, Beijing may introduce additional duties on electric vehicles produced in the United States and reconsider tax benefits used by Tesla Shanghai plants. According to Chinese economic sources, at the Gigafactory Shanghai plant producing Model 3 and Model Y, an internal high-readiness regime has already been introduced. This means that employees cannot leave the premises without notification, and some suppliers are required to keep component stocks for at least 30 days in case of a sudden break in supply chains. American think tanks are also recording worrying signals. Internal sources in the company's finance department claim that in recent days, Musk has held several closed meetings with top management to discuss hard adaptation scenarios. One of the options is the temporary shutdown of certain production lines, preservation of inventories, hiring restrictions, and the search for alternative suppliers in Vietnam and Indonesia. But even these measures do not solve the main problem: time. Even if supply chains are restructured, Tesla will face a sharp increase in production costs that will immediately hit profits. At current tariff levels, according to Morgan Stanley estimates, each Model Y assembled in the United States will become $7,000 to $9,000 more expensive, and taking into account possible retaliatory tariffs in China, $12,000 to $15,000. For the mass segment, this could be a fatal blow to demand. And if the leaders do not reach an agreement in the coming weeks, by the end of the year the consequences will be felt not only by corporations, but also by ordinary people, from assembly line workers in Fremont to investors on Wall Street. And history will show that economic wars, once started with tariffs, rarely end with numbers. More often, they turn into geopolitical crises whose consequences are measured not in percentages, but in destinies.